Hey, I'm Daniel Berger, and this is Adventures of a Real Estate Broker. Welcome to the podcast where Metro New York real estate meets great stories and a douse of humor. Forget the dry sales talk. Here we dive into the fun and unexpected moments of real estate. Join me each week as we explore Westchester, Long Island, the Bronx, and more. You'll hear about the people, the places, and the crazy situations that make this industry so interesting. Thanks to our sponsor, Remax Prestige Properties, we're ready to share the lighter side of real estate. Whether you're a pro, a buyer, or just curious, we've got something for everyone. Ready for today's adventure? Let's get into it. Hello, everyone. Welcome to another edition of the Adventures of a Real Estate Broker with Daniel Berger. I'm Daniel Berger, and this week I'm excited to have Brandon Campbell. He's the Senior Sales Manager of Lima One Capital. He's been there for 8 years or so. And, it's always good to have different people that are involved, not just real estate agents and brokers, but sometimes to get, lenders involved. And Brandon works with real estate investors, and most of his work, I think, and we'll get into it more, is with investors that are looking to fix and flip new constructions or people that want to get into some investment properties to add to their rental portfolio. So with that, Brandon, thank you very much for taking the time for coming on the podcast.
Yeah, thanks for having me.
So, so how many states do you operate in and to help investors with loans?
We're for the most part nationwide, so we lend in everywhere but the Dakotas, Vermont, and Alaska.
Okay, there you
Everywhere.
go.
Yeah.
So that I've lived in one of the Dakotas, so yes, that is everywhere. Um, so what's interesting is you and I are about the same time. I'm 8 plus years as an agent. This is you're younger and more handsome than me. Um, this is like my third career, but generally more sales and marketing type of products, type of industry, more so in the beverage world. And then I got into real estate because my wife was like, "Well, what are you going to do when you grow up?" She's like, "You should be a real estate agent and slash broker." So
Yeah.
so that's how I got into it. So we're kind of in for the same crazy time period,
Right.
which for me has been more up, up, and more up. That's probably since you're dealing, with 45, 48 states, you know, it's probably been slightly more cyclical with, things going up and things not always just going up, but also coming down.
Sure.
So it probably keeps you more grounded in what's actually happening nationally. So like give me,
Absolutely.
based off of your widespread, client base, what are you currently seeing that's happening in the world of lending?
Yeah. Well, the good news is the wheels are still turning. Now, you probably know more about this as an agent, but things are still moving, things are still turning. However, things are just sitting on the market for a little bit longer than everybody anticipated. So we have, I've done fix and flips in like super hot markets, like, suburbs of Atlanta, Georgia, parts of DC, Fort Lauderdale, of all these places. People are pouring into these places, buying new homes and, moving their families across the state. And we still have homes sitting on the market for months at a time. But they do eventually sell, which is, the punchline. But all in all, I mean, like we've been hit with I guess a 1-2 punch of higher rates and then I guess cramped inventory. I read a statistic. I cannot remember it verbatim off the top of my head, but I think the vast majority of any residential mortgage right now in the United States is like below, I think, 5%. So like people do not have the incentive to sell right now that would have made a good fix and flip property for one of my clients or a good long-term hold for that matter. So we're in this like really weird market where, people are just waiting to see what happens next. Thankfully, the rate decrease that we got last month, that did help out a little bit with our rates, obviously. But outside of that, I think, hopefully as the rates start to come down, we'll start to see it maybe not be a 2021 again or 2020 for that matter, but maybe get back to like a normal. And our normal, from our experience, is probably like 17, 18. Things were good, but rates were still at 5%, at the time.
Right. I think historically over the last 60 plus years, 6.5% is like the
Pretty good
average,
rate.
I think,
Yeah.
of what a rate is. My parents bought my childhood house in 1979. I believe the rate was 17%
Yeah.
then. And it had been as high as I think 21%.
Yep.
So, like I said, things are cyclical. And so there's ups and downs. And what's interesting is during the pandemic, I guess the Federal Reserve, with a lot of things shutting down, they the intent of lowering interest rates was to try to keep things moving, and
And that
um,
they did.
and that they did.
Yep.
But what's interesting is that kind of caused inflation, right? The
Yep.
low interest rate caused house inflation. So, there's always a give and take, and there's always right like a yin and a yang to what happens. So,
Yep.
um, you know, I don't know. Higher interest rates from lower interest rates help buyers, right?
Yep.
Potentially, but it really helps sellers because what I saw was um, people, if their lender tells them they can afford $5,000 a month, they then buy to 5,000 a month,
Yeah.
and what was going on was that there wasn't enough inventory. So let's say a 5,000 a month is like a $700,000 house. That's just an example.
Yep.
People 550 to $600,000 house was now selling at 700,000 because there was no supply, no supply, too much demand, and people would bump it up. So it really wasn't good for buyers, right? So
No.
buyers, while they might have had a lower interest rate, were buying, we're overpaying for the house. Um,
Yeah.
I would argue 8% interest is probably better for a buyer because you're fighting against less people, and you're probably getting a lower price on the house. Remember, you said that there's this saying in lending that what is it? You date the rate and you buy and
You
you
manage the
marry the
property.
and you
Yep.
marry the house or buy that. So if you would have gotten a house at 8%, you would have been fighting with many less buyers. But interest rates, just like everything, go up and down. And when interest rates then go to 6% and 5.5%, you then have the ability to refinance, right? You can refinance your rate, but you can't change the purchase price.
Sure. Yeah. But the other side of that coin too is that we're in a time in our country right now where we have, I just turned the big 3-0 this year. And so like there's people my age that make a six-figure income that maybe have a car payment, that maybe have student loan payments, and they can't simply afford a house at an 8% rate. So like, these people that could have bought a house a year or 2 years ago, even though the homes are going up and up and up, but now they just can't simply afford it because the rates are triple what they were in 2020. So it's
True.
a give
But
and take.
my point though is you talked about those houses that are sitting,
Yeah.
right? So at some point, the person who can't afford the $700,000 house at 8% interest, that seller isn't selling it. So instead of being 800, it might have to be 750 or 725. And then there's like, so at some point, right, there's going to be a meeting of the minds potentially, um, where that kind of works out. I actually think it from a broker standpoint, I rather have the higher rates and then work and negotiate.
That's
Um,
interesting.
because I think you can get more house that way, and the rates eventually will come down. Um, you know, why it's really interesting because over the last few years, how's the values just went up, up, and up.
Hmm.
And so part of why houses are sitting now is really because, in my opinion, that everyone's eyes, the seller's eyes are so wide open, right? Of like, oh my God, this sold in my block and this sold in my town. And so houses are, I mean, when I sit down with a seller and you're looking at the comps and you're just like, they're ridiculous numbers and ridiculous numbers. And people then like, oh, let me stretch that a little bit. right?
Yeah, why not?
Um,
See
so,
what I
so
can get.
right. So
Yeah.
let me see what I can get is totally happens. And so the reason why things are on the market, there's a few reasons, but one reason why things are sitting on the market now is because people are overpricing them because of this, like the gluttonous, 3 or 4 years before. So if somebody who's desperate to sell, you're going to lower the price, and you can't really misprice a house, right? If you price it too low, you're going to have multiple people bidding it up, and if you price it too high, no one's going to come visit it.
Yeah.
So
Well, here's a little bit of interesting perspective, I guess, from my end. So, like the majority of my business here at Lima One, I do fix and flips and like build to sell, small subdivisions. That's kind of like the bread and butter. Now, what's happening is a lot of these folks say like, hey, like, okay, this house out on the market for 3 months. I'm not getting any bites. I'm not getting the price that I need for me to make the profit that I need to pay my guys. I hear that a million times. So, hey, let's look at a rental loan. All right. Well, let's see about converting one of your flips into like a rental loan. The issue now that we see is that again, property values have crept up tremendously, but rental values have not. So places like Kansas City, for example, just to pick on Kansas City, 2 years ago, 3 years ago, that would have been an easy rental market. You could buy a house for 100, put 50 into it, and it's comfortably worth 200, 225, and you can comfortably get 1,500, 1,750 in rent, and it meets like, my loan's requirements, which is a debt coverage ratio loan, which, just for the listener, if you're unfamiliar, so my loan product, instead of looking at tax returns, we look at the property's potential to pay itself off. So like if we look at a healthy gap between the rental income and what the mortgage payment is. And so what we're seeing nowadays is we have a rapid appreciation and rental values aren't keeping up. And so we have another affordability crisis, forming all on its own. It's like, okay, well, not only is the higher property values and interest rates hurting, just normal buyer and seller relationships, it's also hurting landlords because they're not able to, charge enough rent to, pay off the mortgage that payment that they need. A lot of these landlords, what they're having to do is like they buy a house with me, they put a little money down, 10% or less. And then when it comes time to do the rental refinance, some of them are shocked to have to come down with more money just to make the deal pencil. So, all in all, from this conversation, yeah, we need to lower rates like yesterday. If inflation comes back down. And
I mean,
thankfully things seem to be moving in the right direction, thankfully. So this isn't like a pie in the sky idea. But hopefully this time next year we can talk about, the crazy high rates that is 5% for a home buyer. Hopefully we can get back to that.
see, my view is there's two reasons why well, fix and flip works when you buy a house at the appropriate amount of cost,
Yeah.
and then you can add your income, your input cost, and then flip it and get a fair value, right?
Yeah.
All set. And the last few years have been actually horrible times for fix and flippers because the value of houses have gone such so that some like my flippers um who aren't able to find houses that it pencils, as you said, right?
Yeah.
Because there are too many people and too many like mom and pop people who want to dabble in it because it's kind of like an exciting thing. There's a lot of HGTV shows about fixing and
Yep.
flips
Tell me
and
about it.
so I wanted this, my wife and I want to do this, my brother and I want to do this. So they're not really professionals, and and what I've seen is that people are overpaying and then putting it and then doing like a reno and maybe a cheap reno, but they're able to get their price because interest rates aren't so bad and because the demand is so high. So I my view is that in the last few years, people who are not the best business people at fixing and flip have still been able to make money because of the outlandish rates of purchase prices on houses.
Yep.
If the market went the other way, my flippers prefer almost like they're waiting for a bubble to pop and more houses that are getting foreclosed because then there's going to be a huge supply
Yep.
and then a long-term investor can buy those properties, fix them up, and wait it out. Maybe rent, maybe do whatever. But
Yeah.
so, but I have seen where you go into a house, you were in the house before it sold, and then you see it after the flip, and you're like, this is some of the worst workmanship I've ever seen.
Yep. Well,
Right?
yeah, you can probably speak to that more, but that is something that I've seen with newer investors is like, I'm buying a house for $400,000 and my goal is to spend no more than $30,000 on a $400,000 house and then flip it for 600. Well, that math don't math,
Right.
and also the certain type of buyer that you need that is going to be purchasing a $600,000 house is looking for better workmanship than I guess like the LVP and maybe thin granite countertops, for like an investor that cheaped out on a flip. So I get that perspective, but yeah, I mean, I see that too. I mean, like I see a lot of newer investors overpay on the front end, on a house. So like, oh, like we got into a bidding war and I had to give the seller an offer that they couldn't refuse. And then what ends up happening is that we get the appraisal back for what the projected value would be after all the repairs are done. And it comes back much lower than they anticipated because they told the appraiser, I'm only putting $30,000 into this. And then also all the comps that they were pulling are from the gated neighborhood, next door instead of, on their street that is turning. So there's a whole bunch of mess that's going on right now, but thankfully, I have a Rolodex of investors that are true professionals with crews, and some of them have 401k plans. I like to joke with them like, hey, you're a business now. It's like like an actual business instead of like a guy swinging a hammer. But those guys are doing fine. It's just it's more so if you're a first time investor, this is a little bit harder of a market to get into because since there's less inventory, you have to buy the right house. And you guess what? The right house is being bid on by all the big guys and they got cash.
Yeah. I mean, that's the whole thing of, trying to lever yourself, is really risky. Like I said, I'm much older, so I own an investment property as well, but
Mhm.
we own it with cash. I'm also smart because my partner, besides my wife and I, are partners with someone who is a contractor.
Yeah.
So I'm no dummy. And actually, we got it, we bought it, we got renovated it, and just before we signed the lease, and just before the person moved in, we had a freeze storm, and pipes froze, and
Oh, yeah.
we had to renovate it all over again. Thankfully, I was worked with my insurance company on that, but my partner is the contractor, so and he's a friend, so he's not really charging for his contractor work. So I
Yeah.
kind of, we caught a break with that, but like, we're kind of like, it makes sense for us to own things because myself being the realtor, my wife's an attorney, he's the contractor. We basically have every base covered, you know, um, you know,
For all the normal, yeah, I mean, that's exactly right. You normally have all the huge expenses covered with your business model. So, but
right. Plus, also when you talked about, so an example is I probably paid like 600 for it, or
Mhm.
150. I'm just making round numbers.
Sure.
150,000 of renovations. Yes, I'm not counting that we renovated it twice because I had insurance money to pay
Yeah.
for most of it. Well, I had to fight with them, but to pay for most of that. So
Yeah.
to have something that's all in for 750, and I actually can get 7,500 a month, rental. So but we have high taxes. Like my taxes are 18,000. There's
Yeah.
$360 a month, HOA. So it's still probably about 8 to 10%, um, which is fair, but
And that's owned
uh,
on cash.
right,
Yeah.
right.
So
So
I'd be curious to
people
see
are,
the calc with debt though. Even at like a 40% LTV, you levered it just a little bit. Your cash on cash is probably much higher.
I mean, the issue is what would I do with that other cash?
We can go buy another one.
But I probably could do it anyway, right?
Well, yeah, yeah,
So
sure.
so I guess the point is if I found other things similar, then
Yeah.
I would, but I can't. That's this was like an off market deal that so there's no point of being levered if I can't find the next thing. But you're right. If I
Yeah.
found two others like this, and then I could buy them, right? So
Yeah.
so my view is the market, it's not it's not so easy. It's not
No.
so easy to do it. And so what's also interesting is somebody who's an investor, someone who's a fix and flipper, and
Hmm.
that's their full-time job. So they have to find they have to find the house or the canvas to do their work, right? Because they won't get paid if they don't do that. So I'm
Yes.
in a different situation, right? Because it's really ancillary for me. My real job is this, and you know, clearly, if I find things that make sense business wise, I can do that. So, my contractors, my multiple contractors, who would do flips haven't really been doing some flips because they're making more money right now being contractors, right?
Yeah.
Where 20% would be low for a contractor. They're making 30 to 40% because quality workers are hard to come by.
100%.
And so they put, some of my contractors will put, they're like, I really don't want that, but if I could, but if they're going to pay me that, I have to do it. So there's still enough work in that where there's no need to force buying the house trying to flip it. So you
Yeah,
know
that's a
um
that's a that's a real big pain point with a lot of my customers is like either finding the right contractor or finding the guy that they like working with. He's always inundated with other jobs. I talked to this lady, I've worked with her for several years now. She was out of Savannah, Georgia, and she does probably about a flip or two a year. She's retired now. I think she has a pension. I think that's how she pays the bills. But this is more again akin to your situation. This is more ancillary income. So we do 1 to 2 a year. And so the contractor that we were going to go with, he had 30 jobs and he could not fit her in for this little $50,000 renovation in this little house over here in Savannah. So we went with another contractor and his bid was probably 30% greater, and he was good. No, probably not as good as the other guy. But still that's one thing that I find other people competing against. So like a newer investor coming into this, like, well, how do you find a good contractor? Well, it's kind of like you got to be in the club to already be in the club, to find the right guy. So partnering with one is probably the best case scenario because they're not going to charge you for money that they're making with you. So I mean,
yeah,
a lot of home
I
builders
mean,
do that too.
that is really, part of what I say being an agent and a broker is
Hmm.
really I'm a connector, right?
Yeah,
I'm connecting, investors to lenders. I'm connecting buyers with their attorneys. We're attorney states over here. Um, you know, um, Contractors and architects and appraisers, and you know that's really the Rolodex is either in my head or my phone, but really being able to connect people. And
yeah,
so
absolutely.
that's really the value. But it's if you're a flipper and you're not the one doing the work, so that's the other thing. So
Yeah,
there are all these other costs, right? So it's almost like would be better to really work with the contractor. Like a contractor really should just really put someone on payroll that's responsible for, managing the flips because then they do the work, right? So then they don't need to make the 30% because they could probably make 20% because they're also going to be making it on the other side. So but everyone has different business models and but certainly the where we I think where we talk about inflationary things is the Fed caused the housing inflation by lowering rates to 2%, 2.5%, because
absolutely.
again, because it moved the price of houses went up. But the other issue is clearly is that construction costs, right? If you looked at like I don't think gas hasn't gone up with what construction costs have gone up
No, it hasn't.
astronomically, right?
Mm-mm.
So um so that's kind of like which makes people well, because it's hard to get the supply, it's also hard to get the work done. And there's also, in building, I guess depending where you are, there's some states are much more regulated, right? with insurances, with applications, with building departments like getting money for opening and closing permits, in some towns more than others.
Yes.
So if you're going to be an investor, you need to really be sharpening your pencil, right? And make, like you said, you have to make sure that the math is mathing.
Yeah, absolutely. And then also, um, and we can transition here. A lot of issues that I also see, especially, let's just say, for example, that like I were to complete a fix and flip loan for a customer, they close on the house, they start working on the house. Depending on where you're at in the country or the county that you're in, is a world of difference when it comes to permitting. And then also what certain things are allowed. So like, I have this one investor. He's around the DC area, and there's several counties that surround DC. So, but I won't mention names. But the one county in particular that comes to mind, he said like anything and everything that they like if they move a plumbing fixture, just a plumbing fixture, it requires an inspection and a permit. And so, but you go to the county next door, which is 15 minutes away, like, oh, it's a fixture, fine, whatever. So like I can see the pros and cons, right, for permitting. Like for example, there's some places in Texas that don't require. Oh, Texas doesn't have a GC license for one. I'll go ahead and mention that. They do not have a GC license. And then in some places, you don't even need to get building permits or like plumbing permits. It's crazy. Astronaut or like a certificate of occupancy. It's crazy. So it's the Wild West over there, you know. But
You know, it, so while I've had to deal with in my flooding, I had to deal with building departments and also other
yeah,
things, and I have to deal with them a lot. Um, in the end of the day, while I don't, I understand why they're there. If they're actually doing their job properly, the reason why they want to pull permits is they want to make sure that the work is done properly, right?
absolutely.
So in essence, they're really trying to protect the homeowner, either the current homeowner or the future homeowner, to make sure that electrical work is being done to code and that it's being done properly, right?
Yes.
Um, and plumbing and all those other things, that if you're taking away, a wall in a structure, that it's not going to hurt somebody by falling, and it wasn't supported by an architect saying that the beams weren't correct or whatever. So,
Yeah.
it's more that people are trying, people try to do what they want to do without that interference. But a lot of times it comes in, we're trying to sell a house and we're like, but you've done all this work, that there's no record of it. In we have some towns here that actually the building department go through the Zillow pictures, and if they see work that was done in kitchens and bathrooms and decks and things like that, they go look to see when the last permits were pulled. And I have houses that are in contract right now. I have two where my buyers, the sale is being held up because the sellers need to get permits for work that was done, and those were both done via via the Zillow.
Oh, goodness.
So,
Goodness.
but in the end of the, and I always tell my investors, I'm like, specifically in certain towns, but I'm like, if you're going to buy it and you're going to fix it, please pull permits, because that could be a snafu on the other end trying to sell, where they see that you've done this, that, and the other thing, and there's been no permits pulled since 1963, right? You're like, well, how did the kitchen get that way? How did the bathroom get that way? So, um, you know, um,
Well,
flipper should at least pull some permits, right? So
I
at
know.
least it
Yeah,
looks like,
absolutely. I will say like from the lending perspective. So if someone were to submit a draw request to me and they, say for example, it's I guess rough electrical work. So we will absolutely require a permit to be pulled before that we remit funds for that. So like I would say that my firm does a really good job of putting guide rails in place for the investor to make sure that they're doing what they're supposed to be doing, because it is a huge liability. Like Lord forbid, we had to take back a house and then it had the same exact permitting issue that you were just speaking of. Well, my firm has to go in there. We have to hire a contractor on our own dime to go rip it out, whatever they did, and then redo it, and then get all the proper inspections and permitting done. So
right.
it's absolutely something that if in a fix and flip investor is listening to this, like absolutely pull permits. There is gray areas. Yes, there's gray areas. You're changing out one plumbing fixture. Okay. You know, fine. I can see the argument for it. But like, hey, you start changing ductwork, you start moving some mechanicals around and some rough-ins. Yeah, buddy, you need to start pulling some permits. You need to.
I mean, switching a plumbing fixture generally wouldn't need that, right? That's more like
Yeah, you're exactly right.
like you're
Generally.
allowed to change a toilet or a sink, you're just replacing it, right? So it's more like moving things, adding like a shower,
Yeah,
things like that. Um, or adding a bedroom in a place that there's septic and you're not really supposed to. And so, and as a lender, you definitely want it to be done properly because like you don't want to foreclose and after now you own the property and then you have to, that it wasn't done right. So, in all industries, there's always ways to cut corners, but ultimately, you've been with Lima for 8 years, so
yeah,
clearly you find them to be reputable, and and both everything that we do is relationship building, right? So
100%.
you're not just trying to make a deal to lend money to make 4,000, you want that person to make money on their flip when the next time they do the flip, you're going to be there. You're going to be helping them, especially in your business. You're repeat. You're getting repeat business much more than a normal real estate
Yeah,
agent
I would,
would be
yeah.
getting.
For like a normal loan officer or a real estate agent, I would say probably 70% of my business now is repeat business. So like I did a loan for them back in, I was mentioning the lady in Savannah, Georgia. Um, I did her first flip and now we're doing her eighth. She's talked to other lenders, but she likes working with me. What I've figured out over the years is like, you know, my rates and terms, we may be better than some other people. Some people may be better. Like we normally trade blows, but like it's really a people business. And so I say all the time, like I'm in the relationship business. I just happen to lend money. So
Right.
it's
Well,
all
that's why
about
when you talked about us being salesmen,
yeah.
we're not.
Yeah.
You're not selling money. Really, you're basically providing the opportunity for investors to be able to tap into funds so that they can go make more money, right? So
Absolutely.
you're really a conduit for it. And what's interesting, I believe, in your business is, you know, your loans probably go so much better for people that you have a track record of flips with, right? Where it's not a hobby, it's their business. Well, it can be a hobby if they're doing it as a hobby and
Yeah.
making money.
Yeah.
Um, hobbies, I always say, my wife and I say a hobby is something that you don't make any money. So it's more like a side business, like a side revenue stream.
Side
But
hustle. Yeah.
but if you're doing second, third, and fourth ones, that the person that you're lending the money to is reputable, does a good job, you have a track record. Clearly, I'm assuming that your company, it's much simpler,
Yeah.
to get them approved to lend the money.
Absolutely. So, and this is industry wide. So like I would classify myself as an institutionally backed private lender. So like just for the listener, if you're curious. So like I view things on a sliding scale. There's hard money, which I think of like, hey, you knock 3 times and you get a bag of money. You know a guy, someone knows a guy who knows a guy. That's hard money. And then bank financing, everybody's familiar with the red tape. You got to sign your life away. We're in the middle between those two. So like, yeah, we're all we do is lend money to investors. That's our whole business model. I'm not a bank. We're owned by a publicly traded company, so there is some regulation that's involved. We have a box. I will say no to files. I don't say yes to everything. There's certain things I will, and there's certain things I will not do. That comes along with the territory. But what I will say overall is that this business, it's been a great career to have. Been able to build plenty of relationships over the years, and I've been able to help the first time investor build their portfolio, and now they're flipping 10 homes a month. That DC guy that I mentioned a little bit earlier ago, he came to me, he flipped 10 houses total. Now we do five a month,
That's
5 a month.
great. Yeah. That's right. That's getting into a business person, right? And then you're providing value to them, right? You're not selling
Absolutely.
anything. You're providing value, and that five is a lot. So for five a month, you don't do something like a line of credit where he can just pull from that?
That's exactly right. So what we do is we set him up with we have it's colloquially called a line of credit, but you know how it works is like it's like a large scale pre-approval that would probably resonate with your audience a little bit more. So like, you know, this guy, he's got a $15 million line with me. He is set for 6 months. He is approved. His borrower underwriting is done. Now, what it takes for us to fund a loan is just as simple as getting an appraisal on the property, and then we can quickly fund from there. So all he has to do is just send me a one-pager application, his construction budget, and his purchase agreement, and then we do what we need to do. And he's good for 6 months at a time. And he's one of many customers that we had that we set up multiple 7 and 8 figure lines with that you know, they just keep coming back. You know,
And for his perspective and his agent's perspective, everything he gets to everything's cash, right? You probably are able to close clearly within a month, right?
oh yeah, I mean like he can close within like 7 calendar days.
Wow.
So we got him up and running. Now, it you know, again, being a nationwide lender, you know, people ask me all the time, how quickly can you close? Well, I mean, if everything goes according to plan, probably 2 weeks. 2 weeks. You know, the time to get an appraisal back, time for us to do everything that we can do, 2 weeks. But if we're in Waterloo, South Carolina, it's probably going to take 3 to 4 weeks. It just depends on
I
where
mean,
we're at.
3 to 4 weeks still good. I'm in New York and things, you know, you might put 30 days on the offer. It's not
Well,
happening in 30. It's not happening in 30 days. It's
no,
rare.
no disrespect to the Big Apple, but everybody, including the dog, needs an attorney, and so all the attorneys are just talking. And you know what I found myself with any New York closing, it's that like everybody's done, and we just need the attorneys to, you know, do what attorneys do.
I actually like an attorney state because I don't want to do things that attorneys should do, right?
Sure.
So there are legal, you know, that's a contract, and that's what lawyers are for. And actually, a buyer, you know, a lawyer, my lawyers, the ones that I use are around $2,000 for the transaction. So, um, and they work, and it's not like so simple, right? They have to go to the closing. That's an hour, hour and a half or more. You
Yeah,
know, the work leading up, they're putting in their time. So I find,
absolutely.
you know, our biggest thing is the title search, right? So you have to make sure that it's free and clear title.
Yep.
And I've my last couple of deals right now, I have encumbrances that we're working on. And it's like, I have no business. While I understand it and I do discuss it, I don't want to be, you know, that those are legal matters that I don't want, you know, to say that we're the due closings based until that those are all taken care of. So um I don't want to do contractor work. I bring in you know, I bring in the professionals for that or appraisals
Absolutely.
or whatever. So, you know, there each person in the pie is important to, you know, to get to the closing table. So
Hmm.
I like having lenders that are professional lenders. I like having, you know, all the pieces lined up. I think makes for a better experience, you know, for our clients. And so, you know, you were talking about I'm in Metro New York. So when you're talking about, oh yeah, they bought something for 200, they put 50 in, and it's a 4 bedroom house. I'm like, that's
No,
barely
it's
even
no, yeah, nowhere
it,
near. So,
right. That's
um,
not even an
yeah,
apartment for us, right?
no, it's not. So our company's based in Greenville, South Carolina, which you know, it's home to a lot of great businesses. We've been up and coming, but you can still buy a house in the mid twos here in the Carolinas, which is crazy.
Yeah. Now, twos is like what the contract, what the estimate would be to repair something, right?
Yeah, yeah.
So I
Well,
walk into houses, I'm like, okay, this needs 100 to 200, right? So it's like, you know, just to get people to do, you know, to get in and do the work, you know, and then you also have, you know, the time that it takes, right? So you also have to, in anything you do, you have to know that you're going to have, you know, 3 to 6 months, maybe more of taxes that you're going to have to pay and carrying costs, and so all that needs to be put into, you know, into the calculus, the
oh,
calculation
absolutely.
of, you know, so it's certainly a tough business, but it's certainly there's more flexibility up here because of the prices, you know. But again, you can't buy something at 6 that needs 200 and then but really have to bid 650 because there's people fighting you. And a lot of times you'd be like, they wanted it more than me, or they have different math. You know, you never know
Mhm.
what people have, right? Sometimes people have mattress money that, the only way, that people will overpay for things because they're trying to get in like money that's not necessarily taxed, or, you know, has come in from whatever means that, other countries or whatever.
Oh my
So,
goodness. I have not seen that. That's
I
that's
mean,
interesting.
one of my flippers is like, people are like, we want to do cash, like bag of. We've actually had a money counting machine. I was not at that closing, but I heard that you needed a money counting machine because they had to count the cash at the closing.
You can
So,
do that?
um, you can you sure, without a loan you can, right? Like
Oh
two
yeah,
people,
without a loan, yeah. But like
right?
I just that is so interesting to me. I figured that like the title company would be like, we need a certified cashier's check or a wire. We can't just take cold hard bennies. That's
Um,
crazy.
No, but but the new house would be covered under title insurance, right?
Yeah.
As long as, I have a seller to like, I have a safe. I'll take cash, so it's rare, but it can be done. But I have somebody right now that, I'm a listing agent, and somebody wants to do an all cash purchase, but they just put $75,000 into their bank, right? It probably, I think it came from another country. They put it in the
Mhm.
bank, and we're like, well, you're now done for 4 months, right? It's for 4 months because there's a look back. And so the bank needs to see them. Well, and it's actually a co-op. It's an apartment that co-ops
Yeah.
are kind of more complicated, but you have to show 3 months of statements. And so that money, you have to basically season that
Yeah,
money.
you got to season the
And they
money.
didn't
Yep.
season it because they put it all in, which it's fine. You're allowed to do it, but a lender and or the co-op board doesn't want to see that. And so now they basically didn't ask people about it, because there is a way that you could kind of do it, but they didn't do it that way. So now you just have, it's a wait and see. So who knows? But
Yeah, we're a little bit different in that regard. So, like, if someone were to deposit $75,000 today and they want to use it for a closing tomorrow, I'm cool using it as long as I know where that money came from.
well,
Like, if I
right.
can,
And I think that's the whole point, where it's like it
yeah.
came from another country and whatever,
Well,
which,
who? I mean, did it come from your rich uncle over the seas? I mean, like, did he give you a
well,
loan? Did
you know
he?
what? Yeah. If it was a lender, it would have been easier to explain that, right? Because then we could have
Yeah.
said what it was. This is though for the management company of a co-op, and there's no, put it this way. Is it possible that they would accept it? Yes, it is possible, but I wouldn't want to get into contract, be like 45, 60 days down the line,
Hmm.
and then they're like, oh, we're not approving this. We don't like what we see, right? And you can't really get them to make a decision on that until after until the application's all submitted.
Yeah.
So, but they're, it's
That's
every
peculiar.
time. Yeah, it is. But as you know, Brandon, when your phone rings every day, your phone rings and you're like, something new could happen, right? Something you're like, wow, I'm shocked about that. Or,
Uh,
so
yeah, it's like that show Pawn Stars. The tagline is, "You never know what's going to come through that door." Like, yes,
yeah.
I've heard of the mobile. Like, someone sent me a mobile home on stilts near the coast. The crazy stuff people come up with.
So that's actually, so the adventures of a real estate broker is really me. I'm actually in the process of working on a book, and then thinking about writing the book. I'm like 8 chapters in. I'm like, oh, maybe I should do a podcast. So
Yeah.
it's really about the crazy things that happen on the way to the closing table. So I've had, houses that I've gone in with people who have passed, and there are guns, pornography, skulls, just crazy stuff. So that's kind of the genesis of it. So give me an example. Tell me a story of something that's just absolutely insane, of,
Yeah, actually,
you
yeah.
working on a deal and how that happened.
There's only one that comes to mind, and this one thankfully has a happy ending. But the story is, it was again a great repeat customer of mine. We've done probably 20 deals at this point, and so he called me in a panic, and we already sent closing docs out, so he was on his way to the closing attorney, and he was like, "Hey, Brandon, like my wife just called me. I got to go home. I got to go deal with this." I was like, "Okay, fine. I mean, like, just let me know about signing. I mean, just, it's fine. Just get back." And so he calls me, uh, and he's in tears. He is weeping. he said, brother, I just pulled my family out of the house. There was a carbon monoxide leak. He pulled out their limp bodies out of the house, all like his wife and his three kids, laid them out on the front lawn. Thank God they were okay. And so we spent the next hour on the phone just like crying because like I've worked with I've dined with this man. I've met with his wife.
Right.
Like I've sat with these people. These are real people with, with souls and hearts and like stories. And so like he's like, oh, well, I can still make it to closing. I was like, no, don't worry about it. Go home. Go to your
Right.
family. So, but craziness that, and he sent me a deal today, and it's probably why he comes to mind, but a carbon monoxide link. I've never had that one happen, but I've had plenty
No,
of,
those,
yeah,
I mean, I actually know people that were in a hotel and all, they both lived, but it was one of their bodies was severely, compromised from it. So that's why those detectors are no joke and you need to have
yeah,
them. And,
I have
you
three.
know, yeah,
Because of
well,
that, I bought carbon monoxide detectors in my house.
and you should really change them out every, it says 8 years, but maybe every 5 years,
Yeah.
because there's you don't that's like a totally serious, that's ridiculous. It's amazing that he called you and he was worried about, he did
Is
know you,
closing.
whatever. I know, it's like, we don't care about the closing,
Yeah,
go
but
fix
and
yourself.
also the thing is, okay, so the perspective on that story is like what's crazy, okay, he called 911 and then he called his loan guy.
Right.
Why would you call me? I
Well,
wouldn't be thinking about a real estate loan if
I
I drag my if I
but you
drag
were
my
you were someone that he could talk to. But you're right, you would
yeah,
think maybe he would call his parents or his wife's
somebody.
family, you
But
know.
yeah, he was in front of their bodies when he called me. And that just goes to show like how this is a relationship business. Now that is a
Right.
very crude example, but like, the relationships that I've been able to develop with these people over the years have been tremendous. I've had two kids now, and I have a borrower in Jersey that sends me a box of Monte Cristo cigars every time I have a baby. And then I have another one that sends me like a gift every single year. The same DC guy. He sent me a Bose speaker last year.
Uh,
These are, I've been able, one thing I will say is that like I love my job. I love what I do every day. I get to rebuild America's neighborhoods and help people build tremendous wealth. And in the meantime, I'm making lifelong friends and relationships. I know like if I needed something, if I needed a gig or if I needed help with a transaction, I know these guys would jump in. When we just got hit by the hurricane, we talked about that at the beginning of the call, but we got hit by the hurricane last week, and I'm a two cell phone guy. So like I got the red iPhone, it's the bat phone. And I cut it off on the weekends, because I want to spend as much time as I can with my family. And one of my borrowers, he lives in Fort Lauderdale. He called me several times over the weekend. And then I turned my phone on Monday and I got all these texts from him. He loaded up his RV and he was ready to come to South Carolina to help me in the hurricane because he was looking at all the news. Thankfully, we weren't hit as hard, but he was willing to drive 12 hours to lend me his RV. That's insane.
shame on you for turning off the bat phone.
Oh my gosh. Well,
I
sorry.
couldn't. I only have one phone, and I couldn't do that. But it's really good. People, I have clients that, you just do things for them, and then they want to do things back for you, and
Yeah.
um, I'm actually taking one of my contractors. I help them buy a house this year, sell a house this year, but I get them some business because my clients need work, and I know that they're gonna, if I send them to them, they're gonna show up, and their prices are very fair. I ended up moving my office this year from the ground floor to the lower level, because I'm never there and I wanted to downsize. And he brought a team of people there for 2 days. I'm ready to pay him. He's like, I'm not taking your money. I'm like, you're
Man.
not taking my money. He's like, no, you do so much for me. So it was just like, that was like touching, whatever. I am taking everyone for a steak dinner in about 2 weeks, them and
Oh
their
yeah.
family. But it's just like, just those things. And, it's just crazy. I mean, even crazy thing yesterday, I was working on, I have a listing and I have a couple of offers, And one of the buyer's agents was like, I have to get this offering, but my mother's on her deathbed. I don't think she's making it the next half an hour. And I'm like, why are we even on the phone? I was
What are
like,
you doing?
and I had never talked to this woman before. So while normally I probably would have negotiated the deal last night, I basically said, I called my seller and I'm like, okay, I don't know this agent, but she's been doing it for 40 years. That she even called us while this is happening is insane, but she's trying to do right by her client, although someone in her office could have done it. And I said, listen, we're going to go to best offers tomorrow at 3 o'clock. Please, spend the time with your mother, you know, um, I don't even know the person, but like, what real estate takes is second, right? And there's always another day for it. But it is about people. And you know what? Maybe the next time she's gonna have a listing, she's been like, oh, Danny was really nice and whatever. And but in the end of the day, being nice
About
to
people.
people
It
and
is.
being nice
Yeah.
to people, right? So if
And
only
doing
our
what you say you're going to do, which is huge in my industry.
if only our politicians could be like you and I, because ultimately it doesn't matter if you're on the left or the right. If you care about, if our politicians cared about citizens like we do our clients, you'd get in a room and you try to help people, right? And so
Hmm.
ultimately that's what it's about, being good people, caring about people, and like you said, doing what you say. That's all. You know what? At the end of the day, Brandon, when we both put our heads on the pillow, we want to be able to sleep at night knowing that we treated people fairly, respectfully, and by doing that, we're going to be able to help people grow their business, and that will help us in the end of the day.
I can't say any better than that, friend.
So, well, thank you, Brandon. It was great having you on. It's hearing your expertise in the lending world, especially for investors, is fantastic. Um, and I certainly have your information now. So when I have people looking out in certain areas, we'll certainly we'll hook you up. 8 years
Yeah.
at Lima One
Yep.
is great. It's obviously you're able to have repeat clients, and that they're doing that because the products that you represent make sense for people, and that you're the person that's really making it all happen. So um, for it's Daniel Berger for another episode of the Adventures of a Real Estate Broker. Thank you, Brandon, for coming on. And until next time, we'll meet again. Thank you, everyone.
Thanks, guys.
Thanks for joining me on the Adventures of a Real Estate Broker. I hope you enjoyed our time together as much as I did. If you laughed, learned something, or just had a good time, do yourself a favor and subscribe to the podcast. A big shout out to our sponsor, Remax Prestige Properties, for making this all possible. Remember to leave a review if you enjoyed the show. It helps more people find us. Until next time, keep it real, keep it fun, and keep exploring the adventures in your neighborhood. I'm Daniel Berger, your New York realtor, and I'll see you in the next episode.